We have Atul Suri of Marathon Trade back with us live here on the market. Good morning, Atul. This is Nantara. So we've got 17,500 on the index, and for the Sensex is 58,500 for the year that's gone by. And as we start a new financial year, it is the consumer stocks that fell out of favor. It was the old economy stocks that came back. My first question to you, as we start the new financial year, what's the big mega trend you're watching out for?
So, Nayantara, as we stand today, the markets are surprising everybody. Remember, we've got this whole Ukraine-Russia thing. Commodities have zipped up, and the equity indexes are just about 6% from lifetime highs. So, what the first thing that is happening is that a lot of bad news, headline news is there globally, but it's getting very, very well absorbed by the market. And that is really surprising most participants. There is also a sign of relative strength in the market. So all in all, as I said, there is a lot of negative news, a lot of negative talk, but I kind of remain optimistic on the market. I also don't think that we are going to run away. I think we are going to have many legs to the year that comes by. The central theme is really going to be commodity prices. They have surprised us the last year. Obviously, I don't think they will redo what they did last year, but you will have ups and down legs. And I think with linked to commodities is inflation and bond yields. So I think the narrative for the year to come is going to be where commodities are headed, what impact is it having on inflation, and how is the liquidity, which is thanks to the way US Fed behaves. So I think this will be the theme. As I said, I'm not bearish. I feel that this is going to be a year when people turn bearish, the market goes up, and when everyone's going to be bullish, the market's going to be surprised on the way down. So we will have a kind of a larger range market. However, in this, I think some themes will play out. The themes that I think that will play out, it will be one that are a little distanced away, because I think, as I said earlier, commodities will be the focal point. And if you have businesses or sectors or themes or trends which are not going to be so affected by the ups and downs of the commodity moves, I feel will be a good strategy for going ahead. So for us, what we have really done is the year gone by, or the few months gone by, when markets have corrected, we have increased our allocation to technology. So we think that the IT services are a very interesting place. They were doing well. They are definitely a very large mega trend. But more so is that they're not very dependent or directly dependent on commodity prices. So, for the moment, I'm trying to keep my portfolio away from direct, sort of ups and downs that will happen with commodity prices, because I feel that will dominate. So the year ahead is going to be more about which themes, which sectors, and which trends you play out rather than the broad market as a whole. But all in all, it's still will be a market in which we will be able to make money.
So swing trading, maybe not trend trading, Atul. But having said that, okay, so you're betting on and IT services. Maybe that's how you're trying to make volatility your best friend as well. But Atul, did you use the recent 10% correction that we saw? While we might be 6% away from the lifetime high, the 10% correction to buy into your regrets, and would you share with us which they were?
Yeah, so essentially, we did reduce our weightage on consumption related stocks because we feel that they are going to be affected. What's going to happen is the top lines may be intact, they may in fact grow, but we feel there is going to be margin pressure because your input cost goes up. So that is one area where we have kind of reduced our exposure. We've increased our exposure in tech services, and here also in more in the mid cap space, because we feel that there are some companies which are very well positioned to make this transition to mid and large cap. Another theme, another sector, another trend that we have invested or use this correction to invest in is the whole capital market space. You saw that this huge explosion that is happening in retail investors, and the beauty is that I am noticing that earlier, many years ago, when markets used to correct, the retail investors were the first to run away. But we are seeing that they're holding out, and there is a massive mental shift that is happening in investment patterns in India. And we feel that the capital market space, which is your broking firms, which is your exchanges, and et cetera, the depositories, et cetera, are going to be very, very big beneficiaries. And we see that play out as a very big mega trend. So we've also allocated to this area. So these have been two spaces where we have increased allocation and use this correction. As I said, the common theme is that trying to stay away from the volatility in commodities, because nobody knows. You have good days, bad days, 10% swings overnight, and it's hard to predict. So we kind of look at companies which or sectors or themes or trends which are going to kind of not be so directly affected. And I think that will be the play out or the theme for the coming few months of maybe for the year to come.
Yeah, absolutely. The joke was that crude off late has been behaving like a mid-cap stock with the kind of volatility it's been seeing. But Atul, you must be tracking the charts for crude as well. While it's definitely cooled off 30% from that 130 odd levels, it's still at $100 to a barrel. I mean, the first time it hit that mark, it was a headline regardless. Will we ever get back to those 80, 90 kind of levels, or is the 100 a new base that it's forming on the charts?
I think we will go sub 100 for sure. I feel that the breakdowns are happening, the pressure's coming, and you are seeing the kind of. So it's not that the demand for crude has exponentially gone up. It is just supply constraints. First, OPEC had kept it very tight, in spite of what is happening in Russia, Ukraine. You can see from statements, OPEC is absolutely laughing their way to the bank, and they're under no cajoling push, etc., to really increase or ramp up production or increase the supply. So what you will really see is that the supply side will remain tight. It's not that the demand has gone up, and this is going to continue creating such swings. So as I said, that I see crude go below 90, but the issue is that even at 90, how does it behave? Well, going back to 60s, etc. I have my doubts. Those are those beautiful phases when we enjoyed almost decadal. From 2008, if you look at the CRB index, it has been in a downtrend. Commodities or deflation has been almost a decadal theme. So we had actually come to forget something. And in our markets, when you forget something for very long, the markets definitely remind you. Again, these things have come center stage. As I said, I don't see them repeating what they did last year, but they are not going to be gone from memory. They are going to be center stage. They are going to have ups and down days. And that is really going to affect companies, corporates, profitability. Because one thing is at a price. As a company, once you have a steady price, you can so-called work towards it, whether you increase your selling price or how you control inventory, etc. But in case the input cost remains very, very volatile, I think that's where the challenge is. And that's where also we will start differentiating that even those sectors, where these commodities have an impact, how well they manage. Like one of our big overweight position, and we continue, we've had it for almost 3 years now, is specialty chemicals. And that definitely gets affected with commodity prices. But we feel very strongly that this is a sector which will be able to navigate through this. And from our research, we get a sense that these companies will do well. That's why when you see that even when the markets have corrected, most of these stocks are still pushing towards lifetime highs. And that really shows you that yes, not everything linked to commodities is bad. It is how well companies are going to be navigated. So just to summarize, we have a big overweight position to specialty chemicals. We continue to hold it. We've increased our exposure to IT. And a new sector theme or trend that we've added in this fall is capital markets. And that's how we are planning to navigate the year ahead.
I'm going to, delve a little deeper into all the spaces that you spoke about. But I want to first talk about the macro trends, Atul, because you're one of those few people who tracks both corners. The other intriguing thing that's happening right now, there is a serious disconnect between what equity markets and what bond markets are doing. Because the US yields are indicating and hinting towards a recession. Are you worried about what you're seeing in the bond markets?
you know the narrative changes day to day. About a month ago it was 7 rate hikes, and it got reduced to 4, then it's 50 bips. So based on data that flows almost every week, or commodities that move every week, I'm seeing a lot of narrative change, and I think this is going to be dominating. To be honest, nobody knows. We don't have the answers. It's like trying to predict the end of the Ukraine and Russia thing. I mean, even the participants don't have answers. These things are so fluid. So one really should not spend too much time, I think, working on them. It's nice to talk intellectually, but it can't impact your portfolio because these are big unknowns. The question is that we have to really, really play on the knowns. And as I said, that it clearly seems to me that this is continue going to be center stage. It is going to be volatile. Bond deals are a reality. They Money is getting tightened, but the fact is that the narrative changes day to day. And at the end of the day, if someone is going to suffer, someone is also going to benefit. And that is what we really do. We look at trends that are playing out even in sideways markets, those trends that play out will give me returns. Those stocks or those companies that continue to deliver in little bit of a volatile or challenging time will continue to give investors returns. So overall, I think you'll have good days, bad days. As I said earlier, when everyone becomes bullish, the markets will surprise you. And when everyone is consensus bearish, the market will surprise you in the upside. That will be the theme. In this theme, we have to insulate our portfolio from this day-to-day volatility and look at themes or trends which we feel will navigate through the short-term or medium-term volatility and continue to make investors. And those are the three themes that I shared with you earlier.
Besides that, Atul, I also want to dig out a theme that you had liked in the past, real estate, because, real estate stocks were coming out of a decadal bearish zone in that sense. The only chink in the armor here is, realty prices are going up. So it's not as affordable as it was 2 years back. Interest rate curve as well is going to be changing. And more importantly, to the point that you were making, that commodity prices are hitting even the realty guys hard. Everything from steel, cement to all the input costs are going up for them as well. Are you still as bullish on realty as you were about 6 months back?
So I still continue to be bullish on that. It's the question is that, yes, as I said, that input cost, commodity prices are going up. The important part is that which company can pass it on to the consumer. So that is the crucial thing, that is the key. And even in real estate, we are seeing challenges, obviously. But I personally think that post-COVID, the demand scenario has changed a bit. Corporates are getting back. So I feel that this is going to be more demand-driven. And some of them will be able to effectively pass it on. So yes, commodity price rise has been a dampener, but I do think that this is a very, very large 10-year, underperformance kind of, long basing pattern. It may get slightly delayed, but I personally think that this is something which has to play out the way we are positioned as an economy, economically, where we are in the cycle. There's no, and there are very few participants also left, really credible participants left compared to what we had many years ago. So I do think, yes, it may take a little more time, but I do think that this will play out over a period of time.
Everyone's been pretty upbeat about the open up theme, and I understand that you as well recently, Atul, have been on the go. There was a recent travel.
Yeah, I mean, it's good. It's really nice to get out. I'm one of those person who loves meeting people. I'm very much a people's person. So any opportunity to go out and travel, and client meetings are great. I love meeting clients. So I got an opportunity. Someone said, okay, let's make, it was an international travel. And, I'm one of those guys who doesn't like to refuse travel. I love traveling. It's an absolute all consuming passion and any excuse to travel. So
Atul,
yes, give me an opportunity to go out, meet clients. I'm very happy to do that.
We are very hurt, Atul, because I asked you to come to the studio. You've not just not come to the studio, you've not even gone office. From what I can tell, you're at home.
Promise. The next time we will shoot will be in the studio, and we definitely do a coffee after that.
Yeah, 100%. But I think, Aisha, it's probably more appealing to all the rest of the world than to come to our studios for now. But Atul, always a pleasure. Thank you for joining in and as always sharing your market insights.